Let me ask you something. When was the last time anyone actually sat down with you and explained exactly how Social Security works for your specific birth year? Not the general stuff. Not the claim at 62 or wait until 70 advice everyone throws around. I mean the real details, the ones that are different depending on exactly when you were born. Because here's what most people never find out until it's too late. The Social Security Administration does not treat everyone the same. Your birth year determines your rules. Your birth year determines your full retirement age. Your birth year determines how much you can lose if you make one wrong move, and how much you can gain if you make the right one. And right now in 2026, there are people collecting hundreds of dollars less every single month simply because nobody ever explained which rules apply to them. Today, I am going to change that. Find your birth year group, listen to what applies to you, and by the end of this video, you'll know exactly where you stand and exactly what to do next. Before we get into it, if you are not subscribed to this channel yet, do that right now. Here's why it actually matters. Social Security rules are not frozen in time. The earnings limits change, the Medicare premiums change, the income thresholds shift. And when they do, the SSA does not call you. They do not send you a letter explaining what changed and what it means for your check. That's what this channel does. I break down every change, every update, every rule in plain, simple language before the deadlines pass and before the damage is already done. The people watching this channel found out about today's information in time to act on it. Hit subscribe, turn on the bell, and let's get into your birth year. I'm going to break this into 4 groups today. Group 1, born between 1943 and 1954. Group 2, born between 1955 and 1959. Group 3, born between 1960 and 1965. And Group 4, born in 1966 or later. Jump to your group if you want. But I strongly suggest you watch all of them because a lot of people in this audience have spouses, parents, or siblings in a different group. And the information in each section could save someone close to you a serious amount of money. Let's start with Group 1. Group 1, born 1943 to 1954. You are somewhere between 72 and 83 years old right now. You've been on Social Security for years, maybe close to a decade. And at this point, most people in your group have settled into a routine. Check comes in, bills get paid, life moves on. And that routine is exactly why this group tends to miss something important. Here's the question I want you to honestly ask yourself right now. Are you 100% certain you are collecting the highest benefit you are legally entitled to? Not just any benefit, the highest one. Because a significant number of people in this age group, widows, widowers, are quietly collecting their own retirement benefit when their late spouse's record would pay them substantially more. Here's how this works. When a spouse passes away, the surviving partner is entitled to what's called a survivor benefit, up to 100% of what the deceased spouse was receiving at the time of their death. In many cases, that number is considerably higher than what the surviving spouse receives on their own record. Now, here's the part that will frustrate you. The SSA does not automatically switch you to the higher amount. They do not review your file and say, hey, you'd get more on your spouse's record, let us fix that. They wait for you to ask, and millions of surviving spouses never ask. Not because they don't want the money, simply because nobody told them they could. If you lost a spouse and you have not specifically called the Social Security Administration to compare both benefit amounts, your own record versus your spouse's record, pick up the phone this week. The number is 1-800-772-1213. Ask them to pull both figures side by side and tell you which one is higher. That one phone call could mean hundreds of dollars more every single month for the rest of your life. The second thing Group 1 needs to check involves Medicare, specifically something called the IRMAA surcharge. And if you don't know what that is, listen carefully because this one catches a lot of people completely off guard. Medicare doesn't charge everyone the same premium. If your income was above a certain threshold in a previous year, they charge you extra, significantly extra. We're talking anywhere from $70 to nearly $500 on top of your standard monthly premium. And here's what makes this particularly unfair. Medicare looks at your tax return from 2 years ago. So if you had a one-time event, sold a property, did a Roth conversion, received an inheritance, your income spiked that 1 year, and now Medicare is charging you a surcharge based on money you no longer have, the fix exists. There is a specific appeal form, SSA 44, designed exactly for people whose income has dropped due to a major life change. You file it, you show what your income actually looks like now, and that surcharge gets reduced or eliminated. If your Medicare Part B premium is higher than $185 a month right now, it is worth finding out why and whether you can appeal it. Group 2, born 1955 to 1959. This is the group I want to spend the most time on today. Because if you were born anywhere between 1955 and 1959, you are right in the middle of one of the most consequential decisions of your entire financial life. And the rule that governs that decision is different for every single birth year in this range. And most people have no idea. I'm talking about your full retirement age. Most people assume it's either 66 or 67, but if you were born in this window, it's neither. It's somewhere in between. And the exact month matters more than you probably realize. Here is the breakdown. Born in 1955, your full retirement age is 66 years and 2 months. Born in 1956, 66 years and 4 months. Born in 1957, 66 years and 6 months. Born in 1958, 66 years and 8 months. Born in 1959, 66 years and 10 months. That is your number. Not 66, not 67, your specific month. Write it down. Now let me show you exactly why this matters in real dollars. Let's say your full retirement benefit at your exact full retirement age would be $2,000 a month. If you claimed at 62 and your full retirement age is 66 and 6 months, your benefit was reduced by approximately 25.8%. That means instead of $2,000, you receive around $1,484 every single month. That reduction never goes away. It is permanent. Over 20 years, that is over $124,000 less than you would have received by simply waiting. Now, I'm not saying claiming early is always wrong. There are situations where it makes sense. Health circumstances, financial emergencies, a specific strategy involving a spouse's benefit. But what I'm saying is this. The SSA will process your early claim without sitting you down and showing you those numbers. They will ask if you understand your benefit will be reduced. You say yes, and that reduced amount becomes your permanent check for life. Now flip it around. If you are in this group and you have not claimed yet, and you are past your full retirement age, every single month you continue to wait adds 2/3 of 1% permanently to your benefit. That is roughly 8% per year. Between your full retirement age and age 70, that adds up to somewhere between 24% and 32% more per month. For life. On a $2,000 benefit, that could be an extra $640 every single month, forever. One more thing for this group. If you are currently working and collecting Social Security before your full retirement age, there is an earnings limit you need to know about. In 2026, if you earn more than $23,400 in a year, the SSA withholds $1 for every $2 you earn over that limit. The money is not gone permanently. It gets credited back once you reach full retirement age. But if you don't know this rule, watching your check suddenly shrink with no explanation can be alarming and confusing. Know your number, know the rule, know your options. Group 3. Born 1960 to 1965. For everyone born in this range, full retirement age is exactly 67. No fractions, no months, 67. And right now you are between 61 and 66 years old, which means you are approaching the window where claiming decisions start to feel real and urgent. So let me give you the number that should be living in the back of your mind before you make any decision. Claiming at 62 with a full retirement age of 67 reduces your monthly benefit by 30% permanently. On a $2,000 monthly benefit, $600 less every single month. For life. Over a 20-year retirement, that is $144,000 in cumulative losses compared to simply waiting until 67. And the SSA will process that early claim without a warning label. They're not required to show you the lifetime math before you sign. Now, here's something most people in this group have never heard of. If you apply for Social Security after reaching your full retirement age of 67, you have the option to request up to 6 months of retroactive payments, meaning the SSA pays you as if you had applied up to 6 months earlier, as a lump sum with your first check. On a $2,000 monthly benefit, that's potentially a $12,000 check arriving alongside your regular payment. There is a trade-off. Your ongoing monthly benefit will be slightly lower since your start date moves back. But the option exists. Almost nobody knows to ask for it. And depending on your situation, it could make a lot of sense. The last thing for this group, and this applies especially to people who are still 3, 4, 5 years away from claiming, go to ssa.gov right now and open your Social Security statement. Look at the earnings recorded for every single year you have worked. One incorrect year on your record, 1 year where an employer submitted the wrong number, or a period of self-employment that didn't get recorded properly, reduces your eventual monthly benefit by approximately $100. Find errors now while you still have time and documentation to fix them. Not after you've already claimed. Group 4, born 1966, or later you are 60 or younger. Retirement feels far away. And that distance is exactly what makes this section so important, because the window to fix certain things for free, without it costing you a single dollar, is still wide open right now. But it will not stay open forever. Your full retirement age is 67. Claiming at 62 means a permanent 30% reduction. Waiting until 70 means up to 24% more than your full benefit, permanently. Those numbers are locked in. What is not locked in yet is whether your earnings record is accurate. Since your very first job, the Social Security Administration has been recording your payroll data. That data came from your employers, and every single year, there was an opportunity for something to go wrong. A number submitted incorrectly. A year that got skipped. A stretch of freelance work that never got reported. A company that shut down and whose payroll records disappeared with it. Each error that goes uncorrected quietly reduces your eventual monthly benefit by approximately $100 per missed or incorrect year. If you worked during the 1980s or 1990s, the era before digital payroll systems, there is a genuine chance your record has at least 1 year that doesn't accurately reflect what you earned. Here's the thing though, fixing it is straightforward, but it requires documentation, W-2s, pay stubs, old tax returns, and that paperwork is significantly easier to find today than it will be in 15 or 20 years when you actually need it. Go to ssa.gov, create a My Social Security account if you don't have one, open your statement. Compare every year listed against whatever records you have access to. If something doesn't match, file a correction request with your documentation. The SSA processes these. Your record gets updated, and your future monthly benefit reflects the correct amount. Do it now. While the fix is free. While the paperwork still exists, before the only time you discover the error is the moment you can no longer do anything about it. Let me bring it all together. If you were born between 1943 and 1954, verify you are on the correct benefit record, especially if you are a surviving spouse, and check whether you are being overcharged on Medicare through an IRMAA surcharge you can appeal. If you were born between 1955 and 1959, know your exact full retirement age down to the month. Understand what early claiming costs you in real permanent dollars, and know the earnings test if you are working and collecting before your full retirement age. If you were born between 1960 and 1965, understand what a 30% permanent reduction means before you make any decision. And ask about the retroactive lump sum option if you are applying after 67. And if you were born in 1966 or later, open your Social Security statement at ssa.gov today and verify every year on your record while you still have time and paperwork to fix anything that's wrong. None of this is complicated once someone actually explains it to you. That's what this channel is here for. Subscribe. Share this with someone in your family who falls into one of these groups. One conversation, one video can genuinely change how much money someone receives for the rest of their life. I'll see you in the next one.